This topic indicates year-end adjustments. Now, it is important for students to know that when we calculate our profit is based on a specific period, a specific financial year, which is most probably 12 months. Unfortunately, it's not always January to December. So it will obviously overflow from one year to a next financial year. Most businesses will start in April and end in March. Some will start in March and end in February. So it depends on when did the business start and which financial year did they choose when they registered that business. Now, the purpose for year-end adjustment is we need to determine our net profit. However, there are income and expenses that appear after we have closed off these from our profit and loss account, but some might not have a bearing in this financial year. For example, if we have paid insurance in advance and we have paid for the next financial year, we need to then subtract that so that it can be relevant in that financial year. But what is important now is how to determine a timeline. A timeline just simply means the period that we are operating in. Now, let's say, for example, we've been indicated the end. Most activities will give you the end of the financial year and not the beginning. So if they've given us the end and they say it's February 2023, we simply apply the simple rule that says, what is the month after February? Then it would be March. We write March at the beginning. And then what is the year before 2013? Then it's going to be 2012. Now that would be our financial period, which means we start in March and we end in February 2013. Meaning everything we want should fall within this timeline. It should be between this timeline. Let's repeat. If they give us the end of the financial period as February 2013, we say, what is the month after February, which is March? Meaning March would be the beginning. So it's the month ahead the year before. The month ahead, but the year before. The month ahead, but the year before. So if it was October, then it would be November 2012. If it's September here, it will be October here, and so forth and so forth. Okay, now the reason why then we calculate, if here's an example between we started in June and ended in July, you'll find that we've got expenses that are not yet paid, that are still outstanding. Expenses payable, another word would be accrued. An example would be salaries are only paid for 11 months. And we know that there's one month outstanding, which means we would divide that amount by 11, get the 1 month and add it back. Same here, rent is only received for 11 months. The same principle would apply. We need to figure out what is the outstanding months. Sometimes here we'll find that rent was paid in advance. Someone paid us rent, but they paid in advance. They gave us for 13 months. We will divide by 13, get 1 month and remove that excess month from, because we only want to report things that fall within our 12 months, our financial year. Prepayments or prepaid expense, usually this would be insurance. If insurance was paid for the next financial year, it includes an amount that falls within the next financial year, then you'll do that calculation. So this is basically what we're going to do. Everything that's accrued, we're going to add. Whether it's accrued income or accrued expense, we're going to add to the amounts. And everything that's in advance or it's paid up front, we're then going to subtract that from our amounts in our trial balance. This is just the starting. The next video will follow shortly.